In this video, we're going to talk about revenues in more detail. So revenues, also known as sales or turnover, refer to the total income generated by a business through its primary operations, such as the sale of goods or services. So for instance, in our example, where we manufacture water bottles, our main source of revenue is that of selling the actual product. So the key term is total income generated. So I want to separate that from actual cash received. Just because we haven't received the cash if we sold the product, that doesn't mean that income hasn't been generated. So in that situation, if we sell the product and the customer is going to pay us at a later date, income is still earned, so we're still going to recognize the revenue. So essentially, it represents the inflow of economic benefits into the company, usually in the form of cash or accounts receivable. Very important. Remember, economic benefits is a definition of an asset, a future benefit. So both cash and accounts receivable is a future benefit. So even if we sold the product and we haven't received the cash yet, where accounts receivable is going to increase in that situation, which is a future benefit because eventually the customer is going to pay us. So there are three examples of revenues. There are three prime examples. There could be other examples as well. So the main one is that of sales. So usually if you're selling a product, sales is the count that's going to increase. If you run a service business, let's just say you're a barber, a tutor, even a lawyer, accountant, in that case, that's going to be service revenue. Or let's just say hypothetically that you got cash laying around, you decide to lend it to another company for the purpose of interest, so you have interest revenue coming in.